I'm delighted to welcome back Georgetown alum and CFTC Chair Rostin Behnam for a conversation that's going to be moderated by Sonali Basak. She's the anchor and global financial correspondent from Bloomberg TV, and this should be a very fascinating discussion. Sonali and Chair Behnam, we are ready to welcome you here.
So there's certainly a lot on your agenda. We'll try to get through as much as we can, and remember, we will be taking questions at the end, so definitely keep those in mind. I do want to start with a very hot topic that you will be facing off this week with oral arguments in just really a couple of days, and that has to do around election betting. Big topic in this election. It's been playing a big role, right? We waste no time here. And so when you think about the path forward here and what you're trying to achieve and the way that now this is so much really up to the courts as well, how do you win? What is your strategy?
Yeah. First, Sonali, thanks for the question. My first favorite question, of course. But I also want to recognize Mike, Psaros, and Rena. It's always great to be back at Georgetown. But really a fantastic day that you are all in for. And I think it reflects the quality of the FMQ and this discussion that we really have to have, which I love the intersection of markets and policy. It often sort of gets looked over, but it really is so critical with the way markets are developing. And a perfect example are markets on elections. And I'll say this, the CFTC actually has been quite consistent on our position over a decade, goes back to about 2011 or 2012, on how we view these contracts. These are binary options. They're essentially yes or no bets on the outcome of an event. And the event can be related to weather, to a decision by the Federal Reserve, a pandemic, but in this case, elections. And there is a specific provision in our statute in the Commodity Exchange Act that prohibits certain types of contracts. Some on war, terrorism, gaming, assassination, anything that's not in the public interest, and also things that are illegal at the federal or state law. So the Commission has taken a position for quite some time that these particular types of contracts, which are binary options on the outcome of an election, are a form of gaming, are illegal under state law because they are banned under many states' laws, and are also against the public interest. Circumstances sort of led me to this situation. As I said, this has been going on for quite some time, but perhaps the music stopped when I was chairman, where we had a new market entrant, Kalshi, who's the plaintiff in this particular case, list a contract last September, about a year ago, and we as a commission put a stay on the contract. That ultimately led to the lawsuit, which then resulted in a decision last week at the district level by Judge Cobb, essentially ruling in favor of Kalshi and against the CFTC. So we're now in the process, as you pointed out, of appealing that decision and sort of pushing our argument consistent with what we've done in the past, and still making the case here that as the primary market regulator of these contracts, as one who sees these markets develop, who the market participants are, and their true functions, right? Our markets, our derivatives markets are around price discovery and risk management. And we have to think about that as a broad overlay of what we see in our markets, whether it's in the agricultural markets, the energy markets, or the financials, rates, credit, and otherwise. So this is a situation that we think is against the law. We will continue to make that case. We'll see what the appellate court says. Their immediate decision on Thursday is around a stay of the contracts itself, but I think they will hopefully review the case on its merits over time.
But there's something more fundamental going on here besides the listing and trading of these contracts. It's the idea here that it could potentially mess with democracy, that it could really play a role in how people vote, is the argument that you make. What evidence do you have of that? I mean, how do you know that this is something that could get out of control?
So we have two things that I say, and I'm going to get to that particular point, but let me jump in on one point that I think seems to resonate with audiences and members of Congress often. We're a derivatives regulator, so we regulate derivatives, financial instruments that are derived from an underlying asset, most notably a commodity. Again, this could be ags, energies, or something like that. In this particular case, where you have a derivative that is based or references an underlying election, we then become what I've called an election cop. Because if there is manipulation in an underlying commodity, again, any commodity, fraud or manipulation, there will be a potential correlation between that manipulated price or that fraudulent price in the underlying commodity and the markets that we regulate. So Congress did give us authority to police underlying cash commodity markets. I know these terms might be a little new to some folks, but you have to differentiate between a cash underlying market and a derivatives contract. We don't regulate cash markets, so we don't regulate a wheat transaction at a Columbus grain elevator. But if there is fraud or manipulation in a wheat transaction between a buyer and a seller, we can use our civil enforcement authority. So what I've said to lawmakers in testimony, to the public, to other reporters is at least one component, and I'm still going to get to your second part of the question, is if we end up listing these contracts on regulated CFTC exchanges, and the way news travels, the way media conducts itself, I don't say that in a negative connotation, the way content is just, in our face in ways that we never could have imagined 10 or 20 years ago, you can imagine a scenario or a hypothetical scenario where there is news put out about a candidate, local, state, or federal. That news is not necessarily true. It then impacts the price of a contract that we regulate. And if it has then come out and alleged that that price was manipulated because of that fake news or that allegation of fraud or manipulation, it could be a voting booth. Remember, we dealt with Dominion back in 2020 as well, and allegations of broken voting machines. Any of these allegations of fraud or manipulation would then pull the CFTC into investigating that fraud or manipulation allegation. And I just don't think that Congress or the general public wants a financial federal regulator policing elections. That, in my mind, is really a line or a bridge too far. So that's one component of it. To your earlier question, what do we have? What information do we have? This is just basic expertise of markets and our ability to oversee markets and our ability to understand and monitor and surveil markets. And in some situations, whether it's traditional commodities, we have obviously gotten an understanding and an expertise in traditional commodities over decades. But with elections and some other assets as well, it becomes very difficult for us to identify and to surveil markets for manipulation, because information flows and the way individuals know about information that could impact the price of a contract is very vague. It's very gray, and it becomes very hard for a regulator to step in. And you can imagine in a political environment where a contract rests on one candidate beating another, or political control of the Senate or the House, again, at the federal or state level, any one decision by a candidate to retire, to come out with a certain agenda item, to suggest that might be their last election cycle, will impact markets. And it makes it very difficult for us to see that information, to surveil these markets, and then that ring of insiders who are aware of it. And we saw this, last point, in the UK when former Prime Minister Rishi Sunak announced for an election in July. There were allegations of individuals in his circle taking bets on the UK election gambling site, knowing that information prior to it was made public. These are the types of things we absolutely have to avoid.
Last question on this, and then we'll move on. We have a lot to cover, but to take devil's advocate for a moment here, you did get a letter from a congressman in the last week asking you to take more control over this situation, to regulate these markets. Is there a benefit to these markets, given that in some ways they do provide more transparency on how people feel? They're almost being used akin to polling these days.
Yeah. So people have mentioned this. I mentioned the UK. There's been gambling on elections in the UK for decades. I will say this very clearly. If folks really, in my view, if folks really want to see these markets emerge and scale and develop because there is accuracy to their sort of price discovery, it should be done at the state level within the gambling regime, right? This is not, in the UK, this is not regulated by my counterpart, the Financial Conduct Authority or the Bank of England. It is overseen by the Gambling Commission. This is largely illegal in most states in the United States, gambling on political events. And I think there's a reason for that. And we want to talk about market incentives. Essentially, states have given a market incentive to innovators and folks in this space to then come to the federal level and seek an entry point into these markets. And then you come to the CFTC. This is the reason that I think I understand folks saying, oh, this is great for data. These are great, sources of information. And if you're an economist or if you're sort of a political nut, I get that, right? But there's a larger question here, and the onion has to be peeled back a few more layers to understand what our responsibility is at the CFTC as a market regulator, and what potential detriment and risk this creates for political and election integrity. And I think as Americans, none of us want to see this happen. And again, we'll continue to make this fight. We'll see what the court decides ultimately, and then make actions or decisions afterwards.
I want to go to another hot button issue.
Yeah.
That's climate. This Friday, the Commission is having an open meeting to really look at the final guidance, to vote on that guidance for voluntary carbon credit derivative contracts. This is a big deal for companies looking to offset their carbon emissions. Why is this so important? How important is this to you in terms of what you're trying to accomplish at the CFTC?
Yeah, so this has been a priority of mine. I've been sort of engaged in the climate area probably going back to 2018 or 2019. When I was a commissioner in the Trump administration, put out a report on climate-related financial market risk. When I became chair in 2021, put together a group of staff to see what we could do at the agency as it relates to climate financial related risk. Ultimately, I will say that with respect to the carbon credit markets, we have listed futures on carbon credit markets. As I said, with the political event contracts, we'll probably talk about crypto in a little bit. We have a vested interest in the health of underlying markets that are reference rates for derivatives contracts. So in this particular case, we have carbon offset contracts on listed CFTC exchanges, and we want to make sure those markets are healthy. These underlying markets are largely unregulated. There's been a lot of discussion and a lot of issues raised and concern about the credibility and the integrity of these carbon markets. We are obviously seeing a once-in-a-generation shift in terms of energy transition. Huge amounts of energy demand will continue to grow, not only because of population growth and demand for different sources of energy, but AI and different sources of technology we've read are requiring huge amounts of energy. And there is a desire by corporates and even individuals to be mindful of their carbon footprint, right? So this is a net zero target that was set in the Paris Accords. And one way to resolve that discrepancy or that delta, because I don't think we can actually get to zero in terms of carbon emissions anytime soon, we are going to rely on fossil fuels and current sources of energy for decades to come, is to have this incentive program to hit net zero by essentially incentivizing others through technology-based carbon capture or nature-based sequestration of carbon by planting trees or any sort of nature-based process to create a marketplace. And this is the power of markets, right? Price discovery, investment, capital allocation, and ultimately risk management. So what we're trying to do on Friday, as you say, is put out a set of principles, guardrails, standards that otherwise don't exist. We've worked very closely with the private sector. This is a classic public-private partnership. We want to be an added value. We want to see sustainability here. And ultimately, we want to see markets be the harbinger of success, be the sort of nexus or the vector for investment and for an ability to transition our climate sources over time.
There's kind of been a stunning amount of innovation during your tenure, including in technology as well as markets more largely. We've been talking about two different ways you're looking to either encourage or really stop some of that innovation as well. One that's been very convoluted in the world of Washington is crypto, as you mentioned. How do you move the ball forward here? There seems to have been a lot of blockages in Congress when it comes to figuring out how this asset class is regulated. I understand you want to do more here. How do you ultimately look to become a larger regulator in this space, and what is the path for you to regulate exchanges?
Yeah, so this has been one of the more interesting experiences of my time as chair, and I think I'll reflect on it probably for decades. But a situation where, as chair of an agency, you make observations about an emerging market that's largely driven by technology, that's largely driven by huge amounts of retail demand because of technology. You add in COVID and folks at home wanting to trade and access to markets through phones and not brokers, and all of these different externalities coming together and creating a really ballooning, interesting market. And for reasons that I stated earlier, to an extent, many of the tokens, as I've said, Bitcoin, Ether, Litecoin, others, are commodity tokens under current law. And unfortunately, we, as I said, don't have authority over cash markets. So we do have Bitcoin and Ether derivatives contracts, futures, options, and we do regulate those heavily, and they operate quite nicely. But the underlying market is unregulated for many of these tokens. And I've made this argument to Congress, unfortunately, for several years now, about this gap in regulation. The Financial Stability Oversight Council has also concluded there's a gap in regulation. So I've come out pretty aggressively, because of observations as chair, to say, look, we're bringing a lot of enforcement cases in the cash market, as I said earlier, because of fraud and manipulation. We really should think about a broader regulatory regime to provide tools to the market regulators so that we can register, so that we can enforce, so that we can examine, so that we could surveil markets in a more traditional way. This will reduce fraud, this will reduce elimination, this will sort of shed light on who the individuals are, governance, conflicts of interest, all these sort of core tenets of good market regulation. And as you said, unfortunately, we've come into a situation where to some extent it's become a bit politicized. To some extent, there's uncertainty about whether or not the assets are commodities or securities. To some extent, there are many members of Congress that just don't think this technology is worthwhile, and that if we were to regulate it as a country, we're going to legitimize it. And unfortunately, that puts me and my agency in a situation where we're always on our back foot, right? We're always reacting to fraud, we're always reacting to misconduct, and we're bringing cases, we're levying a lot of penalties, but ultimately, I want to protect markets. I want to be on my front foot. I want to be forward thinking. I want to protect investors before the fraud occurs. I don't want to have to go back to an investor and say, hey, we tried to get your money back, but guess what? That entity's bankrupt because they were committing fraud. So a little bit of a twisted situation. I know Chairman McHenry is going to speak. He's been a leader in the space. Others have been as well. Eventually, I think we'll get there. I'm vice chair of IOSCO, which is an international organization. Most jurisdictions have gone to this place. They understand the technology is here to stay. I don't speak to the sort of economic benefits of the technology and what it might bring. That's not my responsibility as a regulator. I just have to observe on the front rows what we're seeing in markets, what type of activity we're observing, and what legislation and regulatory regime would be helpful. And it's not about legitimacy or illegitimacy. It's not about what may exist or may not exist in the future. It's about protecting US customers, maintaining our mission, and ultimately moving and evolving with markets. And unfortunately, we haven't done that quite yet. Things take time, but I'm hopeful that over the next couple of years, we'll get to a place where this market will be regulated and ultimately the financial system will be protected.
We can now open up to questions. Would like to get us started on those while we wait for folks to come up to the mic. One last question for you. Obviously, election in November. What do you accomplish into that, and what are your ambitions after?
So obviously focus on the next couple months and the 50 some odd days onto the election. I set out an agenda in 2021. We've largely hit our marks, and we're going to have a bit of a busy end of September, hopefully with the guidance finalized this Friday, pending commission approval, and then a number of other policies trying to finalize over the next month, including a rule on cybersecurity, a rule on customer eligibility, a rule on recovery and resolution of clearinghouses, so very key components of CFTC regulation. So we're going to move forward, smart agenda, thoughtful, and hopefully get commission support. In terms of what's next, just taking it day by day. We'll see what happens after November.
Over here.
Hi, thanks so much for being here today.
Of course.
I'm just curious if there's anything the CFTC can be doing to regulate Polymarket, given that it's offshore and kind of unregulated right now.
So really our nexus with any, thanks for the question, our nexus with any entity is what exposure or what footprint it has in the US, right? So Polymarket, as I understand, is largely offshore, but we did bring an enforcement action against them in the past year and a half, I believe, because they were offering products to US customers as an unregistered entity. So putting Polymarket aside for a second and just giving a little bit of the nuance of like what the law allows, if you have a US entity, whether it's an exchange, clearinghouse, broker, et cetera, they're going to have to register us if they're offering derivatives contracts. If you have an offshore entity, similar to what I just said, offering products to the US and US customers, depending on the size and the type of entity, they would have to also register with us or come within our sort of regulatory remit. So We are observing, any activity that's occurring offshore and that is providing exposure to U.S. customers. And we want to make sure, of course, that it is done legally and within the bounds of the law. And I think our track record from an enforcement standpoint stands for itself, and that if anyone, Polymarket or otherwise, conducts themselves in a way that breaks the law, we will use our civil enforcement authority to make sure that conduct stops.
Last question, over here.
Hi, so the CFTC is closely connected to agriculture activity, so could you please expand upon the current state of the agricultural market, including the challenges being faced and the work done by the CFTC to promote vibrancy in these markets?
Thanks. I love that question. Let's go back to the basics here. So believe it or not, it's our 50th anniversary this year, and prior to us becoming an independent agency, we were a part of the U.S. Department of Agriculture for about 50 years prior to that. And our roots, no pun intended, really are in agriculture. Our oversight committee is the Agriculture Committee, and our core constituency are really agricultural users, farmers, ranchers. And this is a backbone of our economy, and we need to make sure that these contracts are accessible, are price effective, and are achieving their outcomes, right? So it's a farmer during planting season in March or April, getting exposure on a regulated exchange to manage that risk that they have throughout the growing season and ultimately into harvest. And as you point out, there's a lot going on in the world, right? There's geopolitical concerns, obviously, in Ukraine, the Middle East, that are affecting commodity prices. There are always trade and tariff concerns, especially during an election season, and how that's going to impact a producer's ability to export his grain or his goods overseas, which is a huge demand side component for U.S. agriculture. And then obviously weather, something that we talked about earlier, having bigger, more severe storms that are affecting and impacting producers' ability to harvest and to maintain their costs, essentially. And also technology. Technology is driving a lot of changes in a good way for agriculture. So we engage very closely with the agriculture community. I tend to travel during the summer months. I oversee an advisory committee on agricultural users. And this is something that, regardless of what we may be talking about, political event contracts, crypto, carbon markets, this is one of the things that I really love about the CFTC. We're not necessarily known by everyone in the sort of financial market space, but our constituency is so broad that it brings us really to the Midwest, it brings us to manufacturers, it brings us to Wall Street, it brings us overseas. They're global markets, they impact the economy, Main Street, Wall Street, and everything in between. And it really is the underpinning of the growth and the success of the American economy, the ability to manage risk because of these uncertainties associated with a number of issues. And we will continue, I will certainly, to focus on agriculture. And generally speaking, the agricultural commodity complex has been interesting to observe as chair. We obviously saw a huge spike after Russia invaded Ukraine a few years ago because of the uncertainty of Ukrainian exports and growth. But I think the resiliency of the American grower and producer has been on full display between technology, between their ability to grow and produce at really record levels, has maintained relatively low prices, and we're at sort of year low prices across the ag complex. Our ability to export and maintain that part of our economy is really impressive, and I think it's going to continue to be really an engine of our growth, and I love to be a part of that and maintain this market as a risk management tool. Thanks for the question.
Chairman, thank you so very much.
Thanks.
We are out of time. Looking forward to the rest of the conference. Thank you so much.